Okay. Let me know if you have questions in the chat. So, what are the things you need to know about mortgage life insurance? I need you to know that in Canada, you can actually set up what is called mortgage life insurance, and it is actually beneficial to you. The only thing is, I need you to understand that mortgage life insurance is good and there is something better. So, let us talk about what is better. When you want to buy your property in Canada, whether you want to buy an apartment or a condo or a house, there are some things you need to know. Okay. I want to talk about mortgage life insurance. And the reason is you might not know that it is good and you might not know that there is something better. Mortgage life insurance pays off your mortgage. God forbid life happens and you gain admission to heaven. God forbid life happens and you gain admission to heaven. Your mortgage life insurance makes sure that your mortgage is paid off and your loved ones that might be living in the house do not need to worry about money. Right. Some people say I don't care, I've gone, let everybody sort themselves out. But people that are actually matured, people that love their family and they know that whether they are alive or dead, stress of paying the mortgage will still exist. So setting up a plan that makes sure that your family is financially secure is important. Okay. So I'll explain it this way. If you borrow me money, you want to make sure that I pay back. So that is what mortgage life insurance does. Mortgage life insurance protects the lender. So that means the lender has borrowed you money to buy that property. But are you going to pay back? You have signed a contract of 30 years, you signed a contract of 25 years. What happens during that 25 years or 30 years? Are you able to pay back? If you are not able to pay back, then it becomes an issue to the person that borrowed you money. It becomes an issue to the person that borrowed you money. So they want to protect themselves that I borrow this person, they are still going to be owing me a certain amount of money for the next 25 years. So if you don't pay, they want to get their money back. So mortgage life insurance protects the lender during the amortization period, which is during the repayment period for your mortgage or your apartment. So if you don't pay back, they will get their money from the mortgage life insurance. Okay. So excuse me, on your mortgage life insurance, your lender is the beneficiary, right? I hope you get it now. But on your personal life insurance, your family member, your loved ones are the beneficiary. So they serve the same purpose. Your mortgage life insurance protects the lender. Whatever you owe on that mortgage, and you have gained admission to heaven, what happens is the mortgage lender gets their own money because you have mortgage life insurance. But when you have your personal life insurance, your family receive that benefit when you get admission to heaven. They receive the benefit and they can pay off that mortgage debt. They can pay it off, right? And they might still have something extra depending on the type of coverage that you have. I hope this makes sense now. So your mortgage life insurance, you're protecting the lender, but your personal life insurance, you are protecting who? Your family. When you have your mortgage life insurance policy, you can you when you have your sorry when you have your personal life insurance policy, when you have your personal life insurance policy, you can use that as your mortgage life insurance. Sometimes we say the lender will say assign that your personal life insurance to us, but it's serving the same purpose. So the money that you are using to pay for the mortgage life insurance and the benefit goes to the mortgage lender. Why don't you use that same amount of money to set up your personal life insurance and you know that the benefit goes to the family, the beneficiaries you put on the on the policy. So that is why sometimes you need to talk with professionals, especially when you're looking to buy a mortgage. It could be an apartment, it could be a condo. Yes, you're speaking with a mortgage broker. You need to speak with someone like me. I'm a financial advisor so that you can know what you are doing. Don't just assume that you know what you are doing because they might you might actually be making a little bit of ah um should I say you might actually be making some genuine uh stuff that you don't need. You might actually be setting up some policies that are good, but there's something better somewhere. So Mortgage life insurance is good, but the benefit goes to the mortgage lender. Your personal life insurance is good, but the benefit goes to your family. But so, like I said, I'm repeating it over and over. When you have your personal life insurance policy in Canada, you can actually use it as your mortgage life insurance. So I hope that is clear enough. So if you currently have a mortgage life insurance from a lender or from a mortgage broker, make sure you set up your personal life insurance. I can help you to do that. And once it is approved, you can cancel that one because personal life insurance does the same thing as your mortgage life insurance, period. You can actually decide to ignore this message. There is no issue with that. It's just that at the end of the day, you might just realize that you should have done it in a better way. Okay. So there are some things you should actually do if you intend to buy your property in the next if you intend to buy your property in the next maybe 1 year, 2 years, 5 years, and you want to know what you need to do ahead of time. Number one is if you're looking at me and you don't have a credit card, you are not doing yourself any favor at all. Or you have a credit card and you are not using it, or you have a credit card you don't even know where it is, or they even gave you a credit card and you say you don't need it. You need that credit card more than the credit card needs you. I hope you understand that English. You need the credit card more than it needs you, because your credit card is your financial resume. The way you use your credit card is reported on your credit report, and some formulas are used on your credit report to calculate your credit score. Okay, excuse me. If your credit score is low, it affects you financially. It affects the amount of interest that you are going to be given when you decide to buy a mortgage. It also affects the type of interest that you are going to be given when you want to buy a car by car finance. That is very, very important for you to know. Okay, so your credit card has a way of affecting you financially, apart from the fact that you need it. If you don't have a credit card in Canada, you might not be able to buy a property because there is no financial report card explaining that you can manage $50 you have been able to pay back. There is no financial report card that explains that you are able to pay back small money. So, will you borrow me money? You don't know my father, you don't know my mother, you don't know where I live, you don't know my sister. Will you borrow me money? So, that is the way it is. The only way they can know that this person is someone that has some good financial management skills is through your credit report. How have you been managing or using your credit report, and what is the score? What is your credit score? So, in case you're in a situation where because of your religion you don't have a credit card, uh, it's not about religion now. It's about the fact that the system in Canada needs you to use a credit card because they need you to build credit history. Okay, that's the first thing you need to do. You need a credit card, build your credit history, make sure your what is it called? Your credit score is higher than at least 650. Do that for yourself and for yourself and for yourself. You're not doing to impress anybody, you are doing it for yourself. So if your credit score is lower than 500, it's going to affect you when you want to buy that house or that mortgage, or when you want to do car finance. Another thing that I need to point out is your credit card affects the type of sorry, your credit score or your credit report affects the type of job you can get. There are some jobs, not every job. There are some jobs that you are going to apply to and they want to check your credit report, or they want to check your credit score. So, for example, the type of sector that I work in, and I know that there are some government sectors that before you are able to get a job in that sector or that department, they are going to check your credit score and your credit report. If there's any bad thing on that credit report or your credit score is low, they might not even call you for interview or give you the job. My own sector, if your credit score is lower than 625, your credit score is lower than 625, you are not allowed in this sector of financial services. You are not allowed. So you can see how your credit score can affect you. It affects the interest that you're going to pay on that house. It affects the interest that you're going to pay on that car. It also affects your job, especially if you are going to be working in a sensitive department with the government. You're going to be working in a sensitive sector like my own financial services. If your credit score is below 625, you are not allowed. So, okay, the second thing that I need you to do is you need first home savings account. Like I said, I want to talk about five major things you need to do if you intend to buy a property and it's your first property. I've mentioned the credit card. Now I'm talking about first home savings account. So that account is designed to help you towards paying down. It's designed to help you to have a down payment for your property, which also means the money you want to use to buy that first house or that first apartment should be inside a first home savings account. So what is the difference? The money you put in a checking account or in a savings account, you cannot use it to file taxes. No, you cannot use it to file taxes. But for um FHSA, the money you put into your FHSA, you can declare it when you're filing taxes the following year, and that can help you to get tax refund. I hope this helps you to understand why FHSA is good, right? And the money you put into your FHSA is to be invested. You can invest it in GIC, you can invest it in SEC funds, you can invest it in ETF index funds. So I can help you to do that if you are interested. Okay, so that's it. So the third thing that you need to do is, I have mentioned it in my when I was talking about mortgage life insurance. The third thing that I need you to do before buying a property in Canada is, your life is more valuable than that house. Okay, it is somebody that is alive, somebody that is healthy, that can live in a house comfortably. It's somebody that is alive, that is healthy, that can ride a car. So value your life. Okay, some people don't. So I'm sharing you up to value your life. So number three is, you need to set up income protection plan, and also your life insurance policy. Income protection plan simply means, if something happens to your income, how will you take care of yourself? How will you pay your bills? How will you pay your rent? How will you pay your mortgage? How will you feed yourself? Right? That is what income protection plan offers. We have different types of income protection plan. There is disability insurance, there is critical illness insurance. Okay, right? Then life insurance also is the way I like to, especially those that want to buy a property within 2 3 years of arriving in Canada, and you see no reason why you should set up life insurance. So, like I said, your life is more valuable than a house. Okay, when it now comes to life insurance, whether you decide to get term insurance, whole life, or universal life, it is useful to you when you are alive in Canada. If you have a term insurance and it's still valid, you can use it as your mortgage life insurance. It doesn't pay your mortgage when you are alive, but it pays off that mortgage, so your family have peace of mind, excuse me, when you gain admission to heaven. Your personal life insurance policy can be used as mortgage life insurance. Whether you intend to set up term insurance or whole life or universal life, depending on your budget, you can use your personal life insurance as your mortgage life insurance. Okay. So there's a proverb that says you should not put the cart before the horse. The horse should be first and then the cart follows. So the horse is actually going to make the journey easy. So when you intend to buy a house, I always tell people, right, my job is just to advise you. Set up your personal life insurance even before buying a house. I will tell you the reason is, your life is more valuable than a house. It is somebody that is alive that will live inside the house. It's somebody that is alive that will ride that car. Okay, so it is good to have your personal life insurance. And with as little as $50, $100, you can even set up term insurance if that is what you can afford. If you can afford uh, permanent life insurance, go for it. But it's just that in most cases, it's going to be a permanent policy, except people that are able to dump in like 50K, 100,000 into their life insurance policy annually. If that is not the case, then it's a long term policy, and we are going to enjoy it when you actually need it the most. There's a difference between enjoying something when you don't need it, but when can you enjoy it the most? When you actually need it. When your strength is weak at age 70, you can enjoy a cash value from your policy. Because some people like to plant today and harvest tomorrow. Universal life or whole life does not work that way. There is no miracle. If you are putting like 200, 300, 500, it will take time for that policy to mature. It will take time. Okay. Now, when your down payment, number four, when your down payment is less than 20%, down payment for your condo, down payment for your house, down payment for your property. So far it is lower than 20%, you must pay for what is called mortgage default insurance. Some companies call it, thank you Ngozi, some call it mortgage loan insurance. So if your down payment is 5%, 7%, so far it is less than 20%, you are able to buy that property. It's just that you have to pay for mortgage loan insurance. That is why you're going to hear some Canadians saying my down payment is not up to like 20%. The reason why they are saying this is because they know something that you might not know, which is when your down payment is 20% and above, guess what? You should not pay for mortgage loan insurance. Mortgage loan insurance is different from mortgage life insurance. I hope that helps you guys. Okay, so I've mentioned four things that you need to do before you set up your first house for years. Now, apart from down payment, you need closing costs. You need to pay a lawyer or a notary, so you have to factor that in to the total amount of money that you need as down payment when you intend to buy that property. Okay, so apart from your FHSA, you can have your TFSA because that helps you to invest, right? And you have access to your TFSA in case of emergency. Now, before you pull out money out of your first home savings account to buy a property, you have to fill out a form called RC 725. That form, there is nothing like I don't know to CRE. There's nothing like I was not told. Mm-mm. You have to fill out that form if you intend to take out money from your FHSA to buy that property, right? If you don't fill it out, CRA assumes that you took out money from your FHSA to do something else, and that means you are going to be paying taxes to CRA. CRA likes money. Hello, Davido, amazing guy. King Z, original. How are you, original Davido? Interesting. Yem Yem Beauty, Ngozi, how are you? Feel free to send in your request if you have any question for me. Please like and share. Yem Yem, thank you so much. So I thought to share those and thank you so much for watching. Reach out if you have questions. Thank you.